Welcome. Today I have two guests with me, Rob and Dave from Michigan Mortgage. And today we're going to talk about MSHDA loans, down payment assistance programs, and how they differ from FHA and conventional loans. So Dave and Rob, would you guys go ahead and introduce yourselves? Tell us a little bit about your company. And why don't you go ahead and go first, Rob?
Okay. So Rob Garrison, been in the business for about 25 years. So Dave and I started in our basements in 1996. We were buddies from high school, and we were in different careers at the time, and neither of us loved what we were doing. I was an attorney, Dave was in the car business, and we decided to link up and get in the mortgage business, which is actually even a longer story. But anyway, we started in our basement, and so 25 years later, we have 25 employees. We did a little over 200 million last year in volume. Dave and I are partners with our volume, and so together we do about 140 million of that 200 that our branch is doing. Yeah, it's been a good run and a great run. We're over in the west side of the state, and we're super involved with our community. Do a lot of give back programs and things like that, and we just have a really cool culture. We had a great staff, and yeah, that's about it.
Exactly. I'm Dave Lehr, Rob's partner. Like I said, he went to a rivalry school. We played football against each other, and
we won.
so anyway, but it wasn't because of you. But anyway, yeah, we've grown a great culture. We've got two branches, one in the Spring Lake or Muskegon area, and one in the Holland area. And so it's just been a roller coaster. It's been great career, and we've been doing really good and fortunate.
Good, yeah. Does your competitive nature still come out with you guys against each other?
Yeah.
Maybe that's why you're doing so well, right? You guys try to beat each other out.
Absolutely. We don't even get paid on our own production, but we're still competing with us.
Sure.
With each other. It's
sure.
really fun.
Awesome. So why don't we
I
start?
would also add.
Yeah.
Sorry, Alex. I would also just add that. So Dave actually is the number one MSHDA lender in our area.
Yeah.
And we actually, our company, so Michigan Mortgage is part of Mortgage One, which is the number one MSHDA lender in the state of Michigan. So we do lots and lots of MSHDA loans. So we know what we're talking about.
Yeah,
Dave
absolutely.
does anyway.
Yeah, great to add that you're experts on the topic. You're not just some random lenders. So why don't we go ahead and start with a basic question, kind of the preliminary question, then describe to us what a MSHDA loan is.
Dave, you want to start?
Sure. So MSHDA is really not a loan. MSHDA is the Michigan State Housing Development Association that will allow money up to $10,000 in certain areas to help you with your down payment. So you're either doing a conventional loan or you're doing an FHA loan, but then you're getting the funds from MSHDA. So the MSHDA loan is really not a loan. Now, I will say that if you do an FHA loan or a conventional loan and we get a clear to close, then MSHDA has to review everything to make sure what we provided or what they have is correct before they'll lend them the money. So when you say a MSHDA loan, we are really doing either FHA or conventional, and MSHDA is just giving us the down payment and closing cost money.
So I would just add, in case there's somebody out there that's actually like looking at the rules and the different loan products, they will do an RD, but you can do a MSHDA with an RD, and you can do one with a VA too, but those are zero down programs. So we don't ever use them for that.
Yeah.
But you could theoretically do that. And MSHDA does have a loan that doesn't include the down payment piece that we really don't use either. And we can discuss in detail more why we don't use that much.
Yeah, so that's great. And so kind of to add to that we'll just, from what I'm hearing is that basically the term MSHDA loan is a misnomer, because we're not really getting a loan from MSHDA. We're just getting the down payment assistance from MSHDA, and it's going to be on an add-on to the conventional or FHA loans.
So yeah, right. Alex, this might be jumping ahead, but maybe they call it a MSHDA loan because when the money that you get from MSHDA is not free. So maybe maybe that's how they're terming it a loan, but yeah.
Sure.
I think the perception is that it is an actual loan type, but it doesn't really matter because it does get reviewed by MSHDA. And so we do the same thing. We call it a MSHDA loan when it's
Right.
technically an add-on to a loan. And not to jump the gun either, but I think a lot of people, a lot of realtors anyway, just like they used to shy away from FHA loans, they shy away from MSHDA loans. And the reason mainly that they shy away from them is because there are some additional criteria. There's some different levels that you have to qualify for. And if you don't know what you're doing, if you're with an inexperienced company or inexperienced loan officer that doesn't really have a good grasp on all of the things that can come up, you can get burned on it, and it can come way late in the game. It can come even at the time that MSHDA reviews it after it's clear to close from the lender. And so if anybody's been burned by that, then they're shy about it. They don't want to do it again.
Yeah.
Right.
So why don't we go ahead and let's jump to that question then and answer the question, is it harder to qualify for a MSHDA with the MSHDA program versus just doing a normal FHA, conventional, VARD, whatever type of loan program that we're looking at?
So
Go ahead, Rob.
I can start. I'll just hit some of the bullet points, and then Dave, you can tell maybe about a couple experience you may have had with that. But so I just jotted a few of the overlays on there. So technically it is a little bit more difficult because so let's just say let's say we're doing an FHA MSHDA. Okay, it's an FHA loan which has all the FHA rules, plus it has the add-on overlays of what MSHDA requires. So for example, MSHDA, you can't do it if it's under a 640 credit score. If you're doing a manufactured home, you can't do it if it's under a 660 credit score. Whereas FHA technically can go down to 580. So that's definitely more restrictive. If you're getting the down payment money, all members of the household have to credit qualify. So if someone has a bad credit and they're an adult member of the household, they can't qualify. And that can burn people. Like on an FHA loan, you could just pick and choose who you want to have on the loan, but which can disqualify them because they make too much money. So there's another overlay. So it gets a little bit tricky. The income piece and the credit piece can get a little bit tricky. There's some other kind of weird rules, like it has to be less than 2 acres. There's some waivers to that, but that's a kind of a weird rule. Has to be first-time home buyers if you're getting the down payment money. MSHDA or FHA does not have that rule. The other thing is at a higher rate. We can talk a little bit about that, and that's one of the reasons why I haven't used it as much, but it is a little bit higher rate. You can't have a non-occupying co-borrower. It's another big thing. So FHA, you can qualify by having somebody that doesn't live in the house and use their income and credit. You can't do that with at least the one that we use, which is the MI home loan with the DPA, with the down payment assistance to it. And there's a few other ones. Loan limits, you can't go over 224,500. Whereas I don't even know what FHA is now, Dave, but it's 300 or 400,000.
Three something, 340.
Keeps going up as these values keep going up. And it depends on the area, but I think all of Michigan on a MSHDA loan, it can't be over 224,000. Not positive about that, but I believe that's the case. Is that what you've seen, Alex?
Yeah, something like that. I have to look.
I know that's what it is over here. I think it's statewide.
Yeah.
And you cannot, under any circumstances, go over 45% loan to that, or I'm sorry, debt to income. So your debt to income ratio cannot be over 45. And that's a big deal. And that can burn you. If we do enough of these MSHDA loans, you get burned by that one alone. So Dave, sorry to monopolize that, but
so let me fill in some of that if I can. So Rob, you hit the point. If you in a pre-qualification, if you don't know these rules, that's when you get burnt down the road. And that's where we're good at this, because you could go 30 days in underwriting, FHA clears you, and then you get to the MSHDA underwriters and they go, well, this has 2 acres, or wait a minute, there's 3 people living in the house. What's their paychecks look like? Now we got to run their credit score. Oh, they don't have a 640, or wow, now you guys make too much income. So these are the questions that you have to ask in the beginning before you're out looking for a house. So the realtor should never have to worry about these rules. That's something that should be taken care of way before. And that's what we look at. Now, just because my underwriter clears a loan, MSHDA might look at their income differently than what we look at them. We have rules like variable income and stuff like that, where a MSHDA underwriter will take their current pay stub and maybe look at it over a 12-month period and go, oh, this guy's going to make, he's projected to make too much. So we also look at that. So there's a lot of little tweaks that we look at. And if a land is splittable, MSHDA doesn't like that because they can make profit on that money. So that's where that 2-acre thing comes in. So we look at that. And then when a realtor is out showing a house, we don't know if it's a manufactured home or not. And so it's very important when you're doing these loans to know, or have the realtor know that, listen, if it's a manufacturer, they got to have a 660 score, not a 640. And a lot of times customers get burned. My experience way back was, we'll get a loan in, get it all done, and then we'll find out that the girlfriend is on the bank account.
Right. Yep.
And
I've
now,
seen that.
and then all of a sudden we got a problem. I've even had an underwriter look at Facebook and see that they have a fiance, and now they're asking for the fiance stuff. So these are all the questions that once you realize or been through, you ask these in the beginning. That's the most important part. So that when you do send them out, it's golden. And
Right.
And Rob is right. Realtors get burned and they want to stay away, or the listing agent doesn't know anything about it and they'll tell their seller, don't take that offer, but it's really a solid offer. That's,
Absolutely.
Yeah, and we've gone through different markets, right? So a market right now, it's like the listing agent is telling their clients, don't take FHA, definitely don't take MSHDA, don't take VA, don't take any of the, take cash.
Yeah, right.
But Dave and I have been through all sorts of markets. We got started, the interest rates were 11%. I mean, we've been through the 08, 09 turmoil.
Yeah.
So we know that, that changes. What the key is what Dave hit on, is that if you have to have an experienced person doing these things, otherwise it can be very frustrating for people.
Yeah.
And I would also just add that agents do need to understand that, like, the approval might say FHA, but they should also know that they are getting MSHDA money, because it does add that extra underwrite.
Right.
It actually adds a little bit of time. It also adds a little bit more scrutiny.
Yeah, absolutely. Yeah. So to reiterate, like you pulled out there, the key point that I'm hoping everybody, while they're watching this, is that, even if you're, as a home buyer, not going to go out and memorize all the requirements, it's that it puts even more importance on working with MSHDA lenders that have experience doing MSHDA loans, and even, have seen every situation that could possibly come up, like you guys, over the last 25 years. I think that's very critical for home buyers, to make sure that they're working with a lender who is experienced in MSHDA. So with that, I want to dive into a few hypothetical kind of situations and see if we could answer, if I'm a home buyer and I'm looking and I'm watching this video, what kind of things would you be looking at to consider whether or not a MSHDA loan would be better for me over maybe a FHA loan or a conventional? So what kind of situations that we would see, or that we would experience, where a MSHDA loan might be the best option, or FHA is the best option, or conventional is the best option?
Great question. So let me take those. So when I meet with somebody, when somebody's getting pre-qualified with me, I look at all options first, and then we funnel it down to what is the best for the buyer. Now, what I like to do is tell the buyer all their options that are available. And how I start is basically, I'm looking at pay stubs, and I'm looking at credit scores, and I'm looking at your credit report. So we look at, when I grab that file, I want to be able to educate the buyer. Here's conventional. Here's why I like conventional. Here's FHA. Here's why I like FHA and why I don't like FHA. Are you a veteran? No. Okay, you can't do a VA loan. Do you want to live in a rural area? Well, if you do, there's the RD loan. And then, how much money do you have saved? Well, I don't have a lot. Well, have you heard about MSHDA? And that's when MSHDA comes up. So then I go through the pros and cons of each of the loans, We narrow out the ones that they're not going to be able to do, and then we narrow it down to the 1 or 2 loans. And in this scenario, we would say conventional or FHA are your 2 scenarios. Now, if your score is only a 640, it might not approve conventional, and you might not have any option but to go FHA, where FHA is a little more lenient. If you're a 740 credit score and you have $20,000 in the bank, you might not want to do MSHDA, and we talk about that. And then I say to the people, well, we won't know that until you find a house. When you find that house, then we'll decide if you want to do MSHDA or don't do MSHDA, because you might want new flooring, you might want new appliances, it might need a new roof. So instead of you giving the money to me, use MSHDA's money, you keep your money and fix the house up. So that's the scenarios that I do with my clients when they're out looking. So I personally think for a first-time home buyer, that's what this program is for, is to utilize the money. Because right now with the rates the way they are, the MSHDA rates are probably a little better than some normal rates based on credit scores. And they're giving you this money. So, Rob?
So I do the same analysis. One of the odd rules about MSHDA is that if you have $20,000 in assets, you technically don't qualify. So they really are wanting to use this money for people that haven't been able to save. They're usually, a lot of times they're younger people, they're buying first-time homeowners. They're buying obviously under $224,000 homes, and they haven't been able to save a lot of money. So there's definitely a value in that situation where people don't have the down payment money. And Alex, before we started recording this, we talked about the fact that, realtors don't want to see seller concessions anymore. So we used to just do, okay, listen, if you can get 3.5%, I can do an FHA straight loan with you with less conditions at a lower interest rate, and we'll have the seller pay the rest of the cost. Well, right now it's hard to get any seller concessions.
Yeah.
So if they don't have any money, sometimes this is really the only option for them is to do the MSHDA program and get the MSHDA money. I always explain to them, and by the way, these folks have to take a home buyer course, and so they're learning this as well. So, but I explain to them, if you have the 3.5% yourself, sometimes I can get a lower interest rate depending on what their credit score is. Not all the time though. And MSHDA, they lock their rate in, but they don't move it all the time, right? So the rate right now with the DPA program is 4.625%. That may be a little bit higher than I could get on an FHA with somebody with okay credit. But, and I'm sure you're going to ask this and we can talk more about it, but the down payment does have to get, the money that they give you does get paid back eventually. It just gets tacked onto the back end of the loan.
Yeah, absolutely. Yeah, and I'll add to that. In some of the cases, what I've seen as an agent where MSHDA loans are being used is one in my area. I've also seen them being used to cover appraisal gaps. So houses are like, say, we'll have a house that's about $150,000 below the MSHDA requirement limit. And we're seeing offers above asking price. So like we'll see an offer at 160. And if it doesn't appraise, MSHDA will cover, these buyers are using it to cover the MSHDA gap and stuff. So that's another way I've been seeing it. And then the second is, of course, the way that like Dave explained as buyers saving the money, fixing, to fix up the home, because there's a lot of outdated homes, especially if you can go shop around and look at homes that are a little outdated. You're gonna have less competition because most people don't want to put the work in, and so you might end up, actually end up saving money versus having to way outbid everybody just to try to win this offer on a house. So, and then that was my last question that you kind of answered there, Rob. But basically, just talk about what happens when MSHDA loan, what the MSHDA loan or the MSHDA down payment assistance program, if somebody wants to sell their home and refinance.
Yep. So either refinance or sale. The money that they got from MSHDA gets paid back, And Dave's done some refinances for people. There is definitely some savings, especially if you can get rid of mortgage insurance. But Dave, why don't you talk to that?
Mhm.
Yeah, so when you go to the closing on the MSHDA loan, there's some docs there that you do have to sign that says you owe the money back. It's not free. The money that they're giving you is a loan. And I think that is why the rate's a little higher. They're probably making a little more on you over the term. But if you sell or refinance the house, you do have to pay that back.
It
Now,
is it is interest free. It's zero interest on it.
It's just a lien on your property.
Yeah.
Yes.
Mhm.
But so yeah, it's interest free. It's just a lien on your property. And then at the closing, though, there's a form that says every year that you're there, there could be a percentage that you don't owe back. But just assume if you borrow the money, you're going to pay it back. So nobody knows in 7-9 years what will happen. So just assume that
Right.
you owe that money back. Now, in the last 2 years, I've taken a lot of people out of that. We've refinanced them. So for example, 2 years ago, the FHA MSHDA loan was 4.75, or it was almost 5%. That's what we were doing 2.5, 3 years ago for MSHDA. That's what the rate was. Well, then a year or 2 years later, the rates dropped, and I was calling these people and I'm like, listen, let's get you out of FHA. Let's put you into conventional. Let's reduce your interest rate from 5.125 to 3.5. Let's get rid of what you owe MSHDA. You owe $7,000 to MSHDA,
Mhm.
and let's save you $200 a month. And so we were doing a lot of those and getting rid of the loan and put them in a better position. But the MSHDA loan is great for first-time home buyers. It gets them a home. It's your beginning program. It sets you up, and then later we'll just organize you and get you into a better loan down the road if rates go down or whatever. But it's still a great program.
All right. Well,
It's a great point. Sorry, Alex, I just
Yeah,
wanted to reiterate, it's a great point. With all of our clients, we're not just transactional, like here's your one
Mhm.
transaction, see you later. We are reviewing this stuff and making sure they're in the best product. So
Excellent.
yeah, we love the MSHDA loan, especially for first time home buyers.
Great. Well, so if we got somebody watching this, whether they're looking at MSHDA, FHA, conventional, VA, whatever, it doesn't matter. What is the best way that home buyers can get in touch with you guys and just sort of begin this dialogue that you guys talked about, trying to figure out what loan product is best for them, and ultimately, hopefully, finding the right product for them and eventually a house.
Yeah, just go to our website. It's probably the best way at
Okay.
MICHmortgage.com.
Mm-hmm.
And from there, we've got a really, really good website there's information on MSHDA and any other program in there.
Pick
Just
Dave over
click on there.
Rob. Just go ahead and pick Dave over.
There you go. Yeah. I'll put all the contact information on your website. Is there an apply now button or anything on your website?
Oh, yeah.
Can't remember. Okay.
Yeah,
So
for
we'll make
sure.
sure to include that in the listing description if you're watching this video, to just follow the apply now button or give your company a call, and hopefully you begin that dialogue on figuring a loan product that's best and suitable for them.